All right, my name is Atilla Yurtseven. So I'm going to try to explain how to use price action and the trend following. Thank you for joining us today. And about myself, I'm I'm a coder. I'm a programmer since for 30 years now, more than 30 years, but 30 years in I'm coding. So I started trading, just buying Bitcoin, and I was expecting it to go to all the way up to 100,000. And then this was the first lesson I learned from the market. And the market says, so I realized that the market only says that if you are in profit, protect yourself, protect your risk, and protect your money, your wealth. So it's really important for us. And then by time I started to those times I started to the code and some machine learning algorithms, and that can automatically trade for me instead of learning technical analysis and trading methodologies like indicators or whatever you name it. Then I realized that all the predictions are just the predictions, because when you run a machine learning or artificial deep learning algorithm, then the prediction it gives me some price. Yeah, it predicts something, but it gives me the price which is very close to the previous day's closing price. And then I see that, and it didn't make sense those times, because I was thinking that how can this happen? I mean, the price moves maybe sometimes, let's say crypto. Those times I've been trading cryptos. The price moves 10%, 5%, or maybe more, maybe 50% sometimes, or 100% sometimes. But my prediction model gives me a price close to the previous day's closing price. And then it makes sense, because the price is just the results of the returns. So when you add previous day's returns to the opening, to the previous day's close, I mean the return, when you add it, then you're going to have today's price. And it makes sense then, because there is an empirical rule which states that the mean is like zero, because the price goes up, comes down to the zero, returns, it goes up and comes down, it goes up and comes down. Okay, so if you plot a momentum oscillator in your chart, then you're going to see that the base price is usually 0 or 1 or 100 sometimes, but there is a flat price. Okay, and there is a middle point. The price goes up and comes down, and up and comes down, and then it makes us, when we plot a histogram, then it gives us a perfect normal distribution, we say in statistics, which means that there is an empirical rule. Okay, then the bell curve, you remember the bell curve. Okay, so I see that, well, of course, price moves maybe 10%. If price is, let's say I'm looking at the 1,000 days. Okay, I have 1,000 days. If I go to the first bar, opening up to the first bar, and let's say it's $100. Okay, and then if I come back today, and today if I see it $101, then the mean is going to be slightly higher than the zero. The mean, when I say the mean, I'm talking about the average. Okay, so the moving average, or whatever you say. In statistics, we in programming, we mostly use mean and the median. Okay, and then well, if the price is lower than $100, then you're going to see that the mean is, slightly less than 0. So if you have a mean, okay, and if you have a bell curve shape, then if that mean is above 0, then you're gonna know that you are higher than the starting point. If it is less than 0, then you're gonna find out that you are lower than the beginning price. And then well, what I started to do is I started to learn. I started to spend some money to snake oil mentors, and then they were just basically telling that they were promising the heaven. I spent lots of money to them. I lost a lot of money on the market as well, and also in the cryptos and in the mining. Then I started to see some patterns, okay? Because day by day I started to learn trading, to learn algorithms, and learn indicators, moving averages, or oscillators like momentum and volume and something like that. And then I realized something. Well, it says moving average. Price doesn't have to go back to the moving average. Well, moving average has to go to the price. Moving average has to follow price. Price doesn't have to follow moving average. Price doesn't have to go back to the mean, okay, because mean changes as well. Price doesn't have to go back to the mean because price is not in normal distribution. If you have a chart, something, a time series we call, and which is normally distributed, then it has to go back to the mean in the future, not today, not tomorrow, but in the future, it has to go back to the mean. But, when we look at the chart, we don't have any flat mean. After a little bit, story about myself and my past, so let's go back into the charts. Okay, first of all, this is going to be price action and trend following webinar by me. Again, my name is Atilla Yurtseven. Now, what do we have here? So if you look at this chart, okay, we have a trend here. Okay. Now, the trend has multiple parts. Okay, one part. Okay, so the first part is the major level, major range. And this is the major range. This is, for example, basically, this is the whole range. Let me show you. Okay, I'm going to find, maybe, no, not this one. Maybe this arrow one, okay? So this is basically the main range, okay? So major one. Here are some minor ranges, okay? And we also have some micro ranges. And when I say micro, what I can do is I can basically copy and clone this, just a second. And I'm going to move it to the mean, again, median. And I'm going to move it slightly, something like this, maybe a little bit more. Oops. Like that. And, oh my God, what's this? Well, this is by eye, okay? So what we do here, we are not using any Fibonacci or whatever you name it. We are basically using trend, and we are eyeing it. Okay, you don't need to crystal clear, picture perfect. You don't have to be like that. So if you look, there is a breaking point here, breaking of the trend line here. Okay, we draw the trend line from here to here. This this is the breaking point. This is daily chart. But if you go ahead and look at the 1 minute chart or 5-second chart or how can I say yearly chart or 5 minute chart or whatever, you're gonna see same same price action everywhere. You're gonna see same price action everywhere. So what are our expectations? Now we had this uptrend and then it's broken, and there is this sell-off. Okay, so trying to find the range. Okay, just a second. Hayır. This is the breaking point. Sorry about that. This is the breaking point, and then price comes all the way down. There is no trend here. This is sell-off. Okay, this is changing the slope of the market. Let's see. So most of people are going to think that what is the? Can you show me what is the highest point in this chart? Is this the highest point? Most people can see that immediately that okay, this is the highest point of this chart. Okay, well, I realized something, that this is not the highest point in this chart. This is the highest point in this chart. We are thinking flat. Okay, so if you think this is the line and this is flat line, okay, well, I can see that this is the highest point. Okay, and the lowest point is going to be here, not this one here. Okay, you can see that there is a higher price here. Yes, that's a higher price. Now we are starting to think out of the book, because if you follow the book, we know what happens. Most of us know what's going to happen. So 70% or 90% of traders are losing money. Okay, if you look at this chart, this is not the highest point. Just forget about the numbers. Just forget about the numbers. Just think about the 3D space instead of the flat. Make it flat. Make it like think this like that. Just let me give you an example. So I'm going to delete everything here. Now I'm going to use Fibonacci channel tool, but this is not Fibonacci. Really, this is not Fibonacci. Okay, so I am basically changing everything here. Okay, and now I'm going to use trend. Okay, and this is. Just a sec. All right. So I am also going to change the color so we can see better. Now, if you look at this chart, the highest point is here of this trend, not this one. You know why? Because if you think this chart like this, if you make it like this, okay, let's just move it in your head. Just move it, and let's draw this this price action there, these candles there. Okay, and I'm going to use polyline tool. Price started here and goes up and something like that. Don't worry about the color. I'm going to, and comes back and tests again and comes back all the way down and consolidates here and then goes up to here and comes back down and boom. Now I'm going to change the color. So let's say red, and make it a little bit thicker. If you rotate this channel, this like flat, okay, make it flat like 90 degree, you're gonna see something like that. This meant to be the highest point, but no, it is not the highest point. What I see here, I see a lower high here. This is going to be the lower high. This is something, this trading, this methodology is completely, developed by me. I mean, I have invented this one. I've never learned this from anyone. Okay, so this is going to be the lower low for me, because of this slope. So as we can see, when we rotate this trend, I'm going to delete them as well. When we rotate this trend here, and let me try something. Bar patterns. Let's copy it and put it here. And let's see if I will be able to do this. No, it doesn't work that way. It doesn't work that way. Maybe mirror. Yeah, something like that. Maybe we can put it. When we mirror it and put it here, yeah, almost there. Anyway, what we are basically doing here is I'm drawing this trend line because there is a slope, and I am making this slope flat, just like that. This is what you see in oscillators, 100 overbought. You are saying, and in RSI, for example, you are seeing this is overbought, I'm going to sell it. Okay. Well, RSI gives you overbought here, right? So when price comes back down, back here, and RSI goes here, okay? And then it goes up and it comes down here. And you can see a divergence here, okay? In the RSI, you are saying, okay, this is making higher high, and I am making lower high here. And it makes sense because it works basically like this. Basically, it's drawing in the flat. I mean, it rotates for you. Okay, just basically removing the trend, and this is how they do. And also, if there is an uptrend, then we have to expect the uptrend to break down. Okay, now let's come back. And do you have any questions about this all this system? If you have any questions before I go back to the drawing one more time, then we can just ask me right now, and then if everything is clear, I'm going to continue. Okay, just a second. I'm going to have some water. Okay, now let's continue then. Now let's look at this one. We're going to zoom out. I'm going to clear everything. We're going to zoom out. What happened here? There is a slope change. Okay, this is the break of the trend. This is the breaking of the trend. This is the breaking point of this trend. Let's use this one. This is the breaking point of this trend. Okay. And then price starts to go down. Just like that. It's going down. It's making higher, lower highs and lower lows, Just let me show you. This is the high. Goes back up, goes back up, and goes back down, goes back up, and then goes back down. Now, it has to break this high, okay, to make the first higher high. And then it has to come back without taking this low. It has to come back. And then it has to go up to make first higher low, okay? Now, this is called zigzag, okay? So basically, what we are looking at, we are just drawing and spotting the significant highs and significant lows, just like that, from high to low. Then how far it goes up here, and then it comes down here, and then it goes up here, and then it comes down here. Now, what has to happen? So we need a higher low and higher high to see an uptrend here. Well, in the daily chart, yeah, this is climbing up, but when we zoom in, well, it's pound dollars. When we zoom in, then we see something really small and steady goes up, okay? Small and steady. If I see a pattern like this, a chart, a bar like this, let me show you. I can maybe use this one. If I see a bar like this, okay, and this has to be green. Yeah. If I see a bar like this, I mean, a huge bar, this is too much. But anyway, if I see a deviation from, this line, I would sell it because, this is the magnet. It's following this slope, okay? Anyway, what I'm expecting is, I'm not saying this is going to go, down all the way down. But my target is going to be this red one. So in the long run, so it's 190 or something, okay? I want to see a pullback here. Maybe I want to see that pullback right after taking this high, okay? So here is my expectation for pound. Well, basically, I'm writing, or I'm developing a hypothesis here before I trade, and then I'm planning it, okay? So here is what happens. This is not 100%, okay? This is just sketching. So this is most likely my expectation. So what I'm going to, this is not picture perfect, I just drew it. So I'm expecting this price to take this high. Nothing goes up or down just like that until the top. Or anyway, if you look at this one, this price action is very different than this one. That is, this price is consolidating. The consolidation is not sideways. So everybody thinks that, okay, there's consolidation, and they think consolidation only happens in the sideways. No, it's not like that. This is consolidating up, okay? It's a consolidation. There is no volatility here. This is pure trend. This is pure buy action here. There is a pure buy action. When is that going to happen? And we have to see some volatility. Just like volatility break, just like that. We want to see a huge bar downside, but it has to be higher than, the price height has to be higher than this, than all of them, just like this, okay? When I copy price action. I want to see something like that. This is what I want to see. Okay, let's make it right. So this is what I want to see. And why am I expecting this? It's simple. I want to see a higher low because at the moment in the major chart, I don't have any higher low. I still have lower low from this point and lower high, okay? Just like that. And this is broken. And this is right now, it's broken. It doesn't mean that this trend is broken. This trend line is broken. There is no trend, you know, everybody says, oh, this trend is broken. Well, just think about it. If trend is broken, there is another trend. There are major trends, minor trends, nano trends even. If you zoom in, for example, even in the tick chart, you can see different trend. And then you can trade against the trend or with the trend, okay? So when we look at here, right after, my expectation is going to be the breaking of this initial high, the previous high, okay? And make the initial structure of the uptrend. So think about that way. There is no certainty as we know, okay? There is no certainty in the market as we know. But when price goes up and comes down, okay? For example, here, price went up and comes down. I am expecting to see, just a second. I am expecting to see, let's do this color and make it line and a little bit thicker. I have higher low without breaking off, without taking off this low, okay, without taking this low, like taking, you know, violating this low. If it goes high, as soon as one tick above this high, it's going to be higher high, okay? Because, you know, then it's going to be higher than this previous low, high. And as price moves down, like that, just a second, as price, you know, moves down, then it goes up, okay? So what happens here is comes down. This is not the higher high of this move, okay? This, I'm not calling it higher high. I'm calling it the initial structure high. So it goes up and comes down, and then it goes up, back up. Then it has to move, and it has to build this trend like that, okay? And as soon as it goes up, then what I do, and you should do the same, what I do, I'm going to put this trend line from here to here and go all the way up to the previous high. And I'm going to know, even in random world, it works, as you can see. Even in random world, let me show you. Even in random world, it works perfectly. As you can see, there are some, this is the breakout, you know. It works everywhere, guys. It works everywhere. All you need is a you know, strategy, okay? So this is basically building a trend here. First higher low, and then the second higher high. But I need to be careful, because this line, median line, called median line, is going to be a huge, very, very huge resistance point, okay? If it's broken, I know that there is 80% probability that it's going to go back up without taking this high, this low, or this low. But we can never be sure. You know, even 20% can kill your profits. And also, I'm going to see this low after maybe right at here, how am I going to trade this? Because there is too much, from here to here, too much stop loss here. So basically, it has to go up again. And then what I do, I'm putting a stop buy order here. Here is my strategy. If I see something like this, let's think about 5-minute chart, 1-hour chart, or 15-minute chart, or 1-minute chart. Okay, I'm just looking at the chart. I'm going to put a buy limit, buy stop order here, and one tick above this previous high, or maybe a little bit more, not the one tick, because I'm talking one tick because I most of the time I trade futures, so one tick is really one tick, or two ticks, really two ticks. But just consider your spread, and then I would put like as this is the daily chart, I would put like maybe 1 to 2 pips maybe instead of ticks. Okay, a little bit higher. So as soon as price breaks, I'm in. I'm already in. Well, maybe I'm going to use stop here, or maybe here. Well, it depends. I can arrange my risk management position size. There are some websites there. If you Google position sizing my FX book, and I'm going to share the link with you at the end of the webinar. Just please remind me. And then you can still calculate the risk. You can say, oh my God, there are too much stop loss. It's very risky. No, it is not. You're going to go small. You're going to go really small lot. Okay. This is Forex. This is not futures. You can go to micro lots or nano lots. Some brokers support nano lots. Okay. Like, one micro lot of pound dollar is going to be the notional value is $1,000. And one nano lot, it's going to be the notional value is going to be $100. Okay. So we are talking about GBP USD. So it's going to be, everything has to calculate it in dollars, because the second pair is going to be the pound. If that was euro pound, then one lot is going to be 100,000 pounds. The second one is calculated. Okay. I hope that makes sense. And now the price is going up. So where are we going to buy? First of all, I don't want to miss. This is not FOMO. FOMO is something unplanned. If you jump in a trade without planning, using the because of the fear of the missing out, then it is going to call FOMO, and most of the time it's not gonna work, because FOMO is something unplanned. You have to plan your trade in advance and trade your plan. Okay, so this is going to be my strategy. Price is gonna go up. I'm going to buy small, and I'm not going to use all my positions, all my margins. I'm going to leave some, some more money to add to this trade. Most people are going to say, never ever add a losing trade. Well, basically they are correct and they are wrong, because this is my plan. I'm going to add this if price goes down here, okay, and again if price goes down here, and again if price goes down here. Okay, so let's see, I bought one here. I have added almost at the same price one more, because this is this is my plan. Okay, and I have added one more, and I have added one more. My average entry is going to be somewhere around here. Now, what happens here? Well, my, stop either goes here or here. I don't want to buy more because this is the trend following. If you are using trend following, you have to use stop. If you are using mean reversion, you shouldn't use stop. That sounds very risky, but how you manage your risk is basically using money management. Okay, money management. When you manage your money correctly, you don't need to use stop loss. If you go to leverage, too much leverage, then you're gonna, you will not be able to make money in mean reversion without using stop loss. Well, it's basically, or it's gonna take a lot of time. You just need to manage your money and plan it, and you need to know how to trade that way. Now it is, as you can see, what my expectation is, touch of this trend line, higher trend. If price goes up, what I do, basically, I'm going to take half of right at the break-even price. Right at the break-even. This is going to be the break-even price for me. Okay. Now, right at the break-even price, as soon as my whole trade goes into the positive, I'm going to take half off. And my expectation is going to be here. Okay. So this is going to be here. But how am I going to follow this trend? Well, we just bought and then we went all the way up. Well, basically moving the trailing stop, using the trailing stop or trail your stop, is that something I like? I mean, I usually stopped out in profit very early. So if I use trailing stop, okay. So as Haji Zarif told me and taught me, screen is not your friend. Screen makes you, your psychology, the demons and your angels are fighting each other, and you are like, oh my god. The ones in the left says close this trade. Okay, the one on the right says, stop looking at the screen, something like that. Well, because we used to survivals, human being we are survivals, all creatures are survivals. We want to protect ourselves. That's why we choose to close, but we have to be greedy in the trade. But now what we usually do is we are waiting and suffering all this pain and holding our losing trade, and it goes down and down, and we are suffering this. It comes back up right at the break-even point. We are closing our trade, then boom, it goes all the way up to the target, and then you say, I was right at the target. Being right is not going to make you rich. Being right is not going to make you a profitable trader. Okay, so now you have a plan. You need to follow your plan. But there is a but here. When price goes up, here, you're already in profit. Where is your stop loss? Because this is trend following, you need to use stop loss in the trend following. So let's clean this out. I'm going to make it easier for you. Okay. Now I'm going to take my polyline tool. Now, as we know, price came back down here and then boom, boom. And then it's not going to go up at once, okay? Okay. I'm just basically drawing a, something like this. So this is usual, huh? We see this all the time, everywhere, okay? I just made it up. So price came down, and price goes back up. So our entry is just about here, or something like that. So our entry is like here. Now it goes up and comes down and goes up and comes down. Well, let's say price comes up to this level here, this one, okay? So you better understand this one. Well, price is somewhere here at the time. Well, you are expecting the price to touch here. Maybe it's going to touch here. Maybe it's going to touch in the future. Maybe it's going to touch here, okay? And as you can see, your target is also moving higher. Your target is ascending as well, okay? And your stop loss should ascend as well. Let me tell you something, that if you are here and you are expecting the price goes here, your target is here, and your initial stop loss is here, then you are already in profit. Your entry was here. You are already in profit, like, oh my God, like 20%. 3,000 points, is that 3,000 pips? Yeah. In Forex, I think you say it's pips. Just give me 1 second. This is the tick and pip. And yeah, 3,000 pips. You are already in 3,000 pips. And are you really going to risk that 3,000 pips profit and also and 2,250 pips at that? Okay, it's like 5,500 pips just to get, maybe 1,000 pips. Maybe. Okay. So you basically think, okay, my target is going higher, but at that time, right here, my target is 700 pips away from me. Well, what you have to do is you're already in profit, but it's unrealized, okay? It is a paper profit. You have to move your stop, like at least at least same amount. Oh my God. And we stopped out here. Okay. And we stopped out, then price goes back up. But there is a but here again. We stopped out to protect ourselves and price went up. Okay. This is a really unexpected but usual one. Happens even in a random chart, as you can see. I drew it randomly in your face, okay, as in front of your face. So price goes up. There is this V shape. So I will zoom in to this chart. I'm going to go to the 1 or 4 hour maybe, okay? What I'm going to expect to see here is a 1, 2, 3 pattern about this trend. So when I zoom in this chart, I'm going to see something like this. I will 100% see it. I'm going to show you how to catch beginning of every trend, okay, in a minute. So you're going to make it too. Well, it's 100% anyway, almost 100%. So what you have risks as well. You see this breakout? This breakout, we stopped out here. Market stopped us out here. And there is this breakout. Well, we are looking at the daily time frame. In 1 hour time frame, it's going to look like that. Maybe it is going to do this full flag, okay? I want to see a 1, 2, 3 pattern. This is not something I found. Okay, it is there. You can see 1, 2, 3 pattern everywhere. So 1, 2, 3 pattern is basically the same thing we did here. Okay, 1, 2, and 3, and we bought here. Now I'm using the same thing in the lower time frame because we stopped out in profit. We stopped out to protect ourselves. You know what? Making less profit is better than losing huge money or losing less. Your trade has to end in three, there has to be one of these three. You have to close your trade in a small loss or in a big loss, in a small loss, in a big profit, in small profit, or break even. There are four ways you need to close your trade. You need to stop your trade. And remember, only one of them is a loss. And the other three is going to be either break even, a small profit, or a huge profit. Okay. Now, as I'm going to see this pattern, this is like bull flag. But what you are looking for is something like this. Okay. And usually they fake this. They fake this. It's called bear trap. They are just starting to sell them. Boom. It goes up huge. Really, really huge. So what you can do, you can buy right here. You are going to put a buy stop right above the initial high, previous high. And same thing we did here. Now your stop goes either this one or lower than this one. Okay. This time you still targeting this trend line, and you moved your stop loss here. I'm not going to say, oh my God, I lost already that much profit. I'm not going to say this. I'm going to say, oh, thanks God, I protected myself, my money, because there is no guarantee that price is going to go up before stopping you out. And there is nothing is certainty here. Everything is just probability. Okay. So I am going to say this, and as I see some significant price action here, okay, something like that. Anyway, we are looking at the zoomed in. So I'm going to say this: as price breaks a new high, okay, I'm long here, my stop here. As price breaks here, I'm going to move my stop to a little bit in profit. Or if price goes same amount of money here from, let's say it's in this case 1,200 pips. If it comes here, I'm going to take half off. And I'm going to move my stop loss here. I'm already in profit. And I moved my stop loss to break even. There are some, some choices here. I can leave it here, and it's already in free trade because I closed half of my trade. Okay, I basically closed partial. Like I just took half out, and now price is gonna break this one, and then price pulls back, and boom, breaks this previous high. I'm going to move my stop loss. When price touches here, in this case it is here, I have two options. First, I can take my profit, or I can still close some, take some off, let's say 3 of the 4 lots, maybe. Okay, I can take half off, and then what I can do is run the rest. RTR, they say. Okay, run the rest, or it's still okay because your plan to target here and your target is reached. Then you can take your profit and go back to the next trade. Okay. So this is basically price action trading. I never ever use oscillators. I never ever use, sometimes I use moving averages to see the average of the price. What's the average of the price? I'm not going to use it in my trading, but I'm going to use it just to know because, you know, oscillators are not going to give me an idea better than this. They are not going to give me an idea better than this. Okay, this 1, 2, 3 pattern, I told you previously, I told you that I'm going to show you how to catch the beginning of every trend. Every trend has to make higher, higher, higher low, which is called 1, 2, 3 pattern. It's the same thing. So this is your entry, this is your stop loss. End of the discussion. Every time you see this, you have to go long here, put your stop loss here, then throw your trend line. Sometimes what's going to happen is going to break this down, go back, okay? Or sometimes what's going to happen, this price action is going to be steep. Just like that. You shouldn't put this. Yeah, you can do this. You can still do this. You can go along here. Okay. But if this is too much steep, what happens is usually it comes back down. Okay. Goes up, then comes back down, and then goes up, and comes back down, and goes up. Then you have to expect you're going to ignore this. You're going to just use this one as a reference point. This is the high. Now you're going to see a pattern here, okay, harmonic patterns here, okay. So this is how harmonic patterns usually happens. Like there is, if the price movement is too steep, then it's going to make breakdown, and most people say, oh my god, there is this breakdown and it's going to go low. No, it's not. What basically it does, it builds an ABCD pattern here. Let me show you. This is ABC. Okay. 1, 2, 3, not the 1, 2, 3. This is ABC. So, which is called AB. Well, this is something different. ABCD actually we used. Well, I'm going to use ABCD if I can find one. ABCD. This is ABCD. So this is what's ABCD is. AB is equal to CD. This is going to be the pullback, okay? And then we can see the real trend is going to be this one. And this time you have again a few targets like this. I'm going to put here to here and here. And even without planning, this worked very nice. You see, even in a random world, I didn't think this, and even in a random work, it worked perfectly. came all the way down. And you see that there is a support. It came all the way down to the support and goes back up. Even in random world, it's going to work out. Okay. And I hope you guys, I hope this makes sense. As we already know, there was this uptrend here. And now we see a downtrend here. Okay. Right after here, I can put my trend here. And then I can put it here. Okay. Now we have this downtrend movement, because right after this uptrend movement, then we have, after this break, there is another day, another week, another month, another trend starts. Okay, just like we can see, we can think that this is a gap, just like this. Oh, maybe, yeah. I'm going to draw this, and just a second. Okay. So where is that? Well, yes. Okay. Think like that. There is this gap. Okay, this is finished, and now something new starts here. Now, as I have this one or this one, then I drew my trend line. There is none right or wrong. Okay, you can draw your trend line however you want. Okay, so I choosing to draw this time lows instead of highs, because highs are so steep, then I am not really willing to draw them. As you can see, it's broken, and what happens here, it goes back to the high of the trend. In this trend, the highest point is this one. Well, it's confusing, I know, but when you used to it, you will be able to understand what I mean. So you can see that the high point is right here and here. This is the double top. Okay. So when you think flat, untrend this, then you're gonna start seeing things differently. And then it came back down. How can I know there is a resistance here? First of all, there is this perfect confluence. Okay, so for example, if I draw this as a trend, just like that, and just watch my median line, the dashed one. So I'm moving my median line to here. This one here. Here. As you can see that price, as soon as touches this trend, okay, the trend line, and it makes a higher point. This is the highest of the trend and lowest of the trend. Then as this is too much steep, as soon as it's broken up, then it fakes. It has to come down, because this is the first touch. Not has to. Let me show you what happens if it doesn't come back. If it breaks and goes up, you know what's going to happen? This is the breaking point. It has to come back here. It's not 100%. When I say it has to, I'm not talking about 100% probability. Okay, I'm talking about maybe 80% probability, maybe 90, but definitely not 100. So if it doesn't come back, if it doesn't, goes down here at the first touch, if it doesn't work, well, I'm going to expect at least breaking down. Okay, sorry, coming back down, pull back. Maybe it's gonna go up. You know why? Because I'm going to expect 1, 2, 3 pattern here. This time I can sell here. Okay. And maybe if it goes back up, for example, this is like ABC, I can sell. My stop either goes here and here or here. Then I'm going to stop that. You know what? I don't have to wait for this because there is 1, 2, 3 pattern here. So I can stop and go long here. Okay. So what happened here? I moved my initial stop here. And 1, 2, 3, I was thinking that it's going to go all the way back down. And right at here, I shorted the market. Can you hear me?
Yes.
Can all hear me?
Yes.
Okay.
Haji, can you do me a favor, Shen, and if you are asking, can you make the chart a bit bigger because I'm finding it hard to see, yeah?
Yeah, sure. Is this better?
Yeah.
You don't have to see the charts. I'm just drawing the patterns, okay? You just don't need to look at this chart. So again, ABC, well, I thought it was gonna go down and I sold. Well, let's say I didn't take the profit. You know what? If I put my stop loss here and my entry is here, 1 to 1, and this is a point that is strong support, then 1 to 1, I took half off, okay, covered my half of my profit, and move my stop loss, trade my stop loss to the break even, and then I'm already in profit, and even my second trade is a little bit in profit. Again, what happened here? I shorted here, and even if I didn't move my stop loss to the break even, then because I already took half off here, so even if I stopped out, I only paid spread or stopped out in profit at break even. Well, this is finding the trend and following the trend. You just move your stop loss, and here also I went long, okay. And the targets also, there is targets. There are some important targets here. I can see. Well, first of all, this is going to be the target for me. This is going to be the target for me. The reason is because it is a breaking point. Okay. Because, sorry, just 1 second. I don't want this. Yeah, better. This is the breaking point. Breaking point of what? This is the breaking point of a trend here. Okay, maybe I can move a little bit down. There are a few targets here. 190 is my long-term target. And I have this trend, which is a downtrend. But you know what? Even in a downtrend, this looks like a median line for me. And I'm just eyeing this. You just need to, practice and practice your eyes to be able to see all these patterns. Price goes down and comes back up and goes down and comes back up. If you want to follow the trend, you need to short right here, and your target is going to be here. You need to use stop loss at least 1 to 1. If you want to if you want to use mean reversion instead of the trend following, then as price moves down, just like that, you need to buy. And usually there are, wicks like that. Okay, you need to buy and close your profit here and take your profit here. But remember, your target is also going down. So more likely, it's not most likely, more likely, you're going to have some losing trades or the trades in loss. You're going to close some trades in loss. If you don't really know how to use this strategy, this is really, something you need to get used to it. This is really something you need to get used to. But this trend following you can also use here. Well, all you need to see, let's see, this is pound, right? Okay, this is pound. What you want to see is a huge bar, huge movement down, and pull back. Okay, and then price goes down. You sell it here. Okay, and you expect this trend, and there is 100% probability that this price is going to hit here. Now, there is something important here. You have to put your, if you are long right here, you closed out your trade and you wanted to go long right here, you can go long here instead of 1, 2, 3 pattern. If you buy here, you put your stop loss same here, okay? But usually they can fake maybe, and they can again still go and tumble. Well, several trades you can execute here, and using small stop loss, I really expect to see, this price market takes high, okay, takes this high, and again price goes up, then comes back down and make a higher low. So I'm going to have a trend and then go back up all the way up to 190. This is a technical point of view. Okay, so in this journey, if you will, well, there are going to be some, of course, some points that price will not be able to go just like that, which are, for example, this is one of them, and I can see this is the second of them. So these points, I have, as you can see, that I have never used any pivot points or something like that. I'm just eyeing. Just get the screenshot. Okay, right now, get the screenshot, or you watch this in YouTube. Get the screenshot and see what's going to happen when price comes all the way up to these levels. Well, I am, like 100% sure. No, I'm not going to say 100%. Never say 100%. Okay, I'm not going to say 100%. But what I'm going to expect, okay, so this is going to be the price action. This is going to be the price action, something like that. Okay, so this is what I see. So it is not going to be easy to go. And please take your timing. Don't just, you don't have to think that, okay, price is going to be here that time. No, it's not like that. It's going to be similar. It's not going to be 100%. When price goes up there, maybe it's going to take this low one more time. because there is this trend. Okay, there is this trend. Okay, maybe it's gonna take this low one more time. Maybe it's gonna go all the way to, what's that price? $1, £1, $1. Okay, maybe. Who knows? Nobody knows. Okay, so maybe it's gonna go back there. Well, there is 90% probability one day pound is going to be 190. There is 90% probability. I don't know when. Well, all I see is that I can say, okay, this is too low and the price is cheap, I can buy. The price is expensive, I can sell. The price is cheap, I can buy. Price is expensive, I can sell. Something like that. I need to, follow this trend. But I'm really sure that you're gonna see something like this in these, these levels. And the level here is going to be quick. This is going to be quick like that, okay? Because it's empty, no soldiers here. There is emptiness, okay? So there is emptiness, no soldiers here. Only thing I see is going to be, just a second. This one is going to be catchy as well. Yeah, and it worked. even in a random chart, it worked. Anyway, so this is, I cannot really teach this to you. You have to get used to it. You need to think like 3D space, not the 2D space, just like that, just like this chart. This is not going to give you anything. I mean, this is going high, it's going up. You don't see volatility here because the movements are really steady and going up. Well, of course, I need to expect a breakdown. It doesn't necessarily mean the price is going to go back down. What it means, when the price goes back down like that, maybe it's going to go back up all the way like that and then continue doing the same thing. Well, this is, everything can happen. What I usually say, I really don't know what price is going to do. What I know, most likely the price is not going to do. And it's most likely again. There is no certainty here. Okay. And so I hope this makes sense. And I hope you enjoyed my video. Okay. I did this webinar. And if you have any questions, now it's time to take some questions. And again, I'm zooming out this one. Just point these areas, sort of plot these levels to your chart, and just use them as a resistance points. Okay, and you can see why I have given these levels. So this is end of my presentation here. Now I can take some questions if you have one.
Very nice and clear and cut. And somebody had asked in before, two questions came in. One, I think Shen asked that, can you use this on any time frame? And the second one was regarding volatility, yeah?
From 1 second to 1 month, you can use any time frame. Price movements, there are patterns like macro trends, micro trends, mini trends, nano trends, and trends everywhere.
True.
So any time frame, you can use these, anything, stocks, cryptos, forex, everywhere you can use this. Okay.
Your question answered, yes. And the other one regarding branded, I think, from Nigeria, asked about volatility, yeah?
Yes. The volatility, when I say volatility, I'm going to open a different chart. Let's say euro dollar. Or gold, maybe.
Okay.
Let's go to gold. So this is the daily chart. So I can see that there is volatility here. Look, there is no volatility. What volatility means, basically, So price moves small, and one way, okay, and then suddenly breaks out. But we know that uptrend should most likely breaks down. Okay, so there is this. What is our expectation is this one, and it's gonna be support also. And you can see that. Well, when you look at the volatility, there is no volatility here. Volatility is the deviation from the mean, and this line is the mean line. Well, if you cannot eye this, I urge you to use this regression trend tool. Okay, this regression trend, then I'm going to make it like I'm using the different, so I'm going to make it like this. So if you use the regression trend, then it gives you the mean. It gives you the mean, okay? And here we see that this is set to 2 standard deviation, and the different how do you say, the difference is not too much. I mean, the space between mean is very small. But look at this. Look at this. For example, this one. So there is no, there is a little bit more volatility here. Price goes up, comes down, goes up, comes down. There is no volatility here, but here there is a volatility. Okay, and what you want to do to see the volatility, if there is no volatility, you can go with the trend. If there is volatility, you can go counter trend trading, because you have to expect a huge move up, a huge move down when there is volatility. Look, a huge move down, up, then volatility jumps in the long term. When I say long term, you see this? You see this? That it comes. Then we have to see a correction of this movement. Okay? It's all about the law of large numbers. There is volatility here. I can see volatility right here. Okay? Look, in this small area, there is no volatility. The bars are smaller. And then suddenly, bars are going high and then comes down. Okay? Then there comes the volatility. The VIX index, let's say if this is S&P, the VIX index is going higher here because volatility rises. And there is volatility here. If there is volatility, then you expect to trade against the trend. When there is volatility, the problem here, the problem in this price action, well, I can go long here, but maybe this can also happen here. So I'm going to keep this in mind. Just a second. So as you can see, this can also happen. So if I put it in the channel like that, and it is going to be like this, this can also happen. Then I'm going to buy here. And if it goes more, I have my equal sizes here. This one, and maybe this one. If it goes lower, then I'm going to buy here. If it goes lower, I'm going to buy, and I'm going to buy. Okay, this is how I buy low, because I don't buy like that. I basically start buying. I hope this makes sense, but I just copied this price action, these bar patterns, and I copied it, and I just mirrored and flipped. Okay, so you can do it in TradingView. It's really easy. It's right here. 1, 2, 3, 4, 5, 6, 7, and it's called bar pattern. Okay, and it works. I really enjoy that tool as well. I hope that makes sense, and that gives you the answer.
That was very nice, Haji. And also, Tajib is asking your idea kind of thing as guideline that will help in spotting when to enter the market.
When to enter? If you don't know when to enter the market, then you shouldn't enter the market until you know. You know what I mean is that you need to enter the market when you see you have to be in the market already. You have to enter the market. For example, you choose your the one, you know, you need to get used to something, get professional of something. For example, if you are in boxing game, you need to maybe be very good at uppercut. Okay, but you practice it 1,000 times. Maybe you are going to very good at 20 moving average. Well, we don't know. I mean, the moving average, they just move. You know, it's a moving average. I mean, maybe you can even trade with that. Moving average follows the price. Okay, when to get into the market? Well, I don't know. I mean, you have to look at what market. It depends on the market you're talking about. Let's say in the crypto, you're going to ask me if you're going to buy here. Yes, I bought yesterday at Ethereum, for example, and I closed. You know, I bought like DOT. I bought some more altcoins, and I closed in profits. You know, and I also bought Bitcoin at, how much was that? 51, 52, something like that. And I closed. You know, when you say, when I think that, oh my God, price is too high, according to what? I mean, price is price. It doesn't have to be expensive. It doesn't has to be cheap. Price is just price. I mean, it can keep going up, as we see in Bitcoin, in cryptos. It can keep going down, but the down limit is 0. Well, we've seen that oil went minus 40, I think. Well, in the futures market, right? It was in the futures, right, Haji? The oil went negative.
Yeah, this is first time me, even Larry, and like Larry has been trading since 1955 and aged 82 years old. Me, 64 years old. This is me and a lot of traders, you know, been trading long time, for example. We have seen like Marconi and Phillips and them go to 0, but this is the first time as traders in our lifetimes, and many of them, that we see a price going to minus 40.
Yes, Haji, that's incredible.
It is incredible. It is like, you know, groundbreaking that when you say, oh, it can go to 0, no, guys, it can go to minus 40 even, yeah?
Yeah.
And also, regarding, sorry, to jump in a little bit regarding when you mentioned price. Price is never too high or never too low. Price has no emotion. We have the emotions, not the price. So you have to trade what you see, not what you think. You know, as Larry would say, yeah? And even he wrote a book about that. Say, for example, we are sitting and I put 10 pounds on the table. And I say, what do you think? And you say, oh, with 10 pounds, I can buy maybe a burger or whatever. Then I put 50 pounds. Say, oh, I can have a dinner, you see? And then I put 500 pounds on the table. And your emotion is changing. You say, oh, maybe I can buy a laptop with that. Then I put 10,000 pounds on the table. And you say, oh, I can maybe get a car, maybe do this. You see, your emotion is playing as the money is coming on the table. The money itself is only numbers. Money has no emotion. We have. Okay, sorry, Haji, all yours.
No, Haji, can you hear me? Hello?
I can hear you. Yes, I can hear you.
Yeah, Haji, just a second. So I hope I give you, you're 100% right. Price has no limits or has no emotions, as you said. But, you know, if we started begging, like hoping oh my God, please come back. I'm hoping it's going to come back or something like that. Then you shouldn't be there. I mean, already you have to take the loss and you need to get out and look for the next trade. You cannot win every trade. Well, you cannot. Basically, you cannot. So, any other questions, please?
Yeah, just on that, um, regarding what you just said, Haji, basically, the reasons that you go in a market, your reasons, yeah, doesn't have to be other people's reasons. If the reasons you go in a market and you take a trade, either buy or sell, and then you realize that you have to have a mentality that if the reasons you went in the market in a trade for, if they don't exist, then you should get out of that trade. Simple as that. So when you say, when do I enter a trade or when do I don't enter a trade, it has to be you who decides my reasons are wrong. Yes, let me get out. Simple.
Yeah,
Simple
exactly. Exactly.
Simple as that.
It is really hard to close the trade in loss, but you need to get used to it.
Yeah.
Then, and it is really, as you see that how much money you are leaving on the table when you leave early, then you are going to get used to it, how to hold, run your profitable trades. And as you taught me, Zarif Ustad Ibro taught me, screen is not my friend. Again, I mean, really, it is not my friend. It is not your friend. No one is your friend. Even you are trading against yourself here in this market. Your emotions are against you. So nobody is your friend here. Not the trend, not the volatility, nothing is your friend. Just you have to decide, you have to think that, and it is financial markets are everyone is in a race to take your money from you.
Yes.
But you basically, technically, when you buy something, someone else is selling it to you. Or when you sell something, someone else is buying from you. When you sell at the top, you are thinking that price is too high, but someone else is buying from you.
True.
Okay. So again, price is price is right. There is an efficient market hypothesis, and you can go ahead and read about that. So FAMAS hypothesis, that's the FAMAS, and then you just go ahead and read this. I'm the ones who are not agreed, but price is price. I mean, it can go up, it can go down, it can consolidate. Price never goes sideways. Everybody think that price goes sideways. No, it's just change of the trend like this. Maybe it is doing something like this. Price goes, sideways like that. Then boom. You know what happens here? That is this. This is happening. Okay, this is happening. You need to be careful here. This is what price really does. Everybody says that there is market trends 30%. No, market trends, price moves 100%. Money never sleeps. Money never sleeps. Okay, even in the weekend, you wake up on Monday and you've seen these gaps. Money never sleeps. Always, it's live and it's here. So you just need to do your own homework. Your screen time during your practice has to be too much to get used to it. And then day trading, even if you are day trading, you need to trade small. Small makes a big difference. Small trading makes really, really big difference. So just get used to just practice. You have to practice. You have to train your eyes. I hope it makes sense.
Reminded me of a saying: in theory and practice are the same. In practice, it is not. I didn't say that. Albert Einstein said it. And also, Yeah, so use that. You know, theory textbook, market is not textbook. Yeah, you have to change with it. You know, you have to change with it.
Yes, of course, it is live
Yeah,
actually. You
right.
know,
You see,
it's
it can do anything and be right. Another
yes.
question somebody asking is Shai said about how do you identify traps in a trend, and the other one, Ruben asked. Um can you, of course, you know, can you use Fibonacci as a help on price action? So maybe Haji, you can do Fibo and trend trap or whatever.
So Fibonacci, I don't use Fibonacci.
No,
What
I know you use the
basically,
Canva, yeah.
yeah, well, yeah. Basically, you draw Fibonacci from left to right always. Okay. So here is the, you can take the screenshot, and here is the my levels, GAN levels. Okay. I'm dividing them half. I'm dividing them half. But if you want me to use this Fibonacci thing, well, I'm basically finding the initial, significant high and significant low. Okay. And now if I put a time, just a second. What is that? Okay. The circle. What's this? Yeah. This is from here to almost here. Okay. Now the breaking point is important. This is COG thing. Okay. Center of gravity, COG. So what we have here, this is the middle point, okay, and this is the highest point, and this is the lowest point. So we also have the second part of this trend, okay, just like this. For example, I'm going to draw. Listen, guys, I really don't like to stay in the book. Okay, I always uh, go go with the with something different. I don't like staying uh, rules. I don't do that. So if you move it here, then we have another another period here. Okay, so what you can do, basically, you put a line from here to here. This is the first one. Well, we have some more points here. For example, here is one, here is one, here is one. This is that. This is just double topping. But also we have here, here, here. Okay. What you can do, you can put from line from here. Sorry. Here, here, and even here, and here, and a few more lines. Now let's look what happened. So this is Fibonacci, but now it is something really different, right? And also we have some more pivots areas, like, for example, here and here, and also, oh, this is the breaking point here. As you can see, all of them really works. I mean, all of them. If it is going down, for example, this is the breaking point of this, and it comes back to the breaking point, then goes back up, and then goes back down, and comes back, and then goes back down all the way down here, and then there is this reaction, action, reaction. Okay, basically this is how I use Fibonacci. I mean, this is not really Fibonacci. I don't care the levels. I don't really. I'm just looking at them. Well, you can say, so what happened here? Well, what happened here is an up, up movement, uptrend here. Basically it goes up, and comes down, goes up and breaks at once and comes back, 80% probability. Then goes back up. It didn't touch here again. Then there is what I said. There is 80% probability that is, or 90%, if not, then it's going to come back down, and it came back down. So here, if I put it here, this line is going to be a strong resistance into the future. Now, what we are doing here, we are projecting it into the future, okay? So there is 80% probability that price will come back to 1816, okay? And again, I'm not saying this has to happen today, tomorrow, or, there is this probability. This is what all I'm saying. And also, there is a high percent probability that price is going to come back up here. And there is also a really high percent probability that price is going to come back here. So these levels are really strong resistance levels. I started buying gold, okay? I started buying gold. Even if it goes down, I don't care. I'm buying gold, okay? If it comes down, look, there is a strong, okay, I need to put one more here. Just a second. I think it crosses here, okay? So there are, strong supports here, okay? You just need to see all these supports by drawing these lines. What we are basically doing, we are drawing from the past, we are projecting it into the future. This is all we are doing here, okay? Nothing more. This is all we are doing, and this is basic, this is simple. And we want to put one more here. And you can say, oh, this is too much. How are you going to trade this? Well, this is daily. Go back to 5 minutes and see what happens. You can see that. You can see what happens. This is how you trade, guys. This is how you're going to trade. You can see that what happens when price touches these levels. Breaks down. You see that? Breaks down. There is 80% probability that price is going to come back up here. It comes back up. And then tests. And this point is going to be a strong resistance and support. Even the price goes back up here, then it's going to come back down, goes up and comes back down. But again, there is a strong probability that price is going to go back up there. This is not a financial advice, by the way. Of course, do I need to give you this disclaimer? You should be already aware of that. But everything we are talking here, I'm explaining just for educational purposes, as you can see that. These are not financial or trading advices or investing advices, okay? So it's all your own risks. But again, as you can see, there is this, for example, this is 5-minute chart. Even in 5-minute chart, now if it goes high, it has to come back down, okay? I mean, I know my target is up, but even if it goes up like that, it has to come back down. Boom, and then it is gonna make this. It is gonna make this. Okay. So I am expecting this price action, and you have to, there is no way, and there is no one will be able to teach you everything. I'm also a student for Larry Pezzamento is also my mentor, and he taught me there is no holy grail. You cannot, if you're looking for a simple answer, there is no answer. The answer is you guys. You are the answer. How you read the market, how you plan your trade, and how you trade your plan.
Haji,
that's all about you. Yes, Haji.
Haji, I want to disprove you. Yes, there is a holy grail.
Ah, really?
Zarif is going to give you the holy grail. I'll tell you exactly where it is.
Okay, where is it?
It is in a 9-inch semicircle located between your left ear and right ear. If you use that part, that is the holy grail.
Okay, so it's ear, right ear, left ear and right ear. Okay.
In the half circle, that is where your brain is. That is the holy grail. You need to use
Yeah,
that. You need to use
exactly. Exactly. So, you have any more questions? Wow, it's 2 hours now. It's nice. Haji, put some poll, poll here. Maybe I want to hear if people liked this or not. I want to see. Okay, I hope these make sense. And if you have any questions, please go ahead. Well, we are going to put this webinar. This webinar is being recorded, and we are going to put this webinar on YouTube channel. And hopefully, Zaripai is going to give you the link, and then you will be able to watch it. And if you don't have any questions, then shall we end it here, Haji? What do you think?
Okay, Haji, the question of Sheena is regarding trend lines. Is it connecting with lower high and lower lows or like that? But me and you both know we can go through the price action as well. Maybe you can explain that to me. Yeah.
You can draw trend lines. I'm going to show on the chart. Well, you can draw trend lines from higher to lower high like that, okay? And then you expand it to here. But now you see that it's not touched. So that's why when you draw trend line, you always put the middle as well. So it's called a median. For example, from here to here, we already have this price. And then we put it here. As you can see, this median work like a support here, and it goes back up, and then comes and puts a wick there and needle, then goes back up. Okay, so this is one way. You can also use, for example, here you can also use from low to low. Okay, there is no hard rule here. Most people think that in this slope, in this angle, this is the highest point, right? But most people think it wrong. In this is the highest point. This is the highest point of this trend. Then again, this is the highest point. Okay, as you can see, that highest point is broken. You can see that highest point is broken. This is higher than this one in this trend. Remember this. This is higher than this one. This is complicated, I know, but you are going to use to that as you. And look, even if I put it here to here, throw here, look what happened in the past. This one worked amazing. And then goes back up, and then comes back here, and then goes back up. Okay? So you can also draw this trend line like that. Or you can do it like this. For example, you can think that price is not going to go there, but let's put it here. Don't remove your trends because it's going to work in the future. They are going to work in the future. Don't remove your trends, clear your trends out of your chart because they are going to work in the future better than they work in today. Okay, you just need to know that these trends are going to work better in the future because you're already in it. Now it's broken down, and there is, now we know that it is I'm significant that this trend is strong and it's broken down. Then when it goes back up, then I'm going to short it here. Even if I don't short, what I'm going to do is something different, guys, but it's gonna it's gonna be, complicated for you maybe. I'm going to take this deviation out of here, and I'm going to mirror it, and I'm going to flip. Okay, just like that. Maybe don't ignore this one. I'm going to take this like that. Okay, something like that. Well, I'm going to expect price goes up, deviate, same size deviation from here to here, and then I'm going to short the market, or at least I'm going to wait for this price touches here and then go back up. So this is again different time frame. For example, I can be bullish in the daily, bearish in the hourly, and bullish in the 1-minute chart. Okay, well, it depends. It depends how you want to trade. You want to be a swing trader? You want to be a scalper? You want to be a day trader, or you want to be a position trader? Maybe it depends. It depends how you read the market. It's complicated, but you can make it simple as you practice. Okay, well, there are a lot of things that it seems complicated until you get used to it. Okay, but when you get used to it, then it's not going to be complicated anymore. Well, remember something like, for example, when you in the class, for example, some of you have a lot of professions. Then when you were in the class, for example, if you are a doctor, at the beginning in the university and school, you didn't understand anything. When you see what do you say, dead body, when they show you the dead body, you just basically fall down, or vomit or something. Then suddenly you see these people are going to surgeries, they're cutting people. Like, I cannot even think of doing that, but they are cutting to help to save their lives, okay? And they're used to it. Well, do you think it's really easy, something easy? Yes, it's easy for them, not for you or for me. So it's basically all about the practicing. There is one word, there is a really nice sentence. People say Confucius, some people think that Confucius said, and some things that Abraham Lincoln said. Well, what it says basically, if I hear, I forget. If I see, I remember. If I do, I understand. So it's all about this. You need to practice. You need to practice every day. One single thing. Let's say 20 MA breakout. One single thing. Breakdown. One single thing. Just practice every day. You're gonna make what do you say? Chronicle, like chronicles, or you take notes. Okay, like you just do it today. This week I'm going to watch price action, like moving average, 20 moving average breakout every day, like 5 days. I'm going to practice this one, and the other day maybe you're gonna practice RSI, okay, every 5 days. Well, in time, it's gonna come, and you're gonna see. And for example, you're gonna say that I'm going to open 1-minute chart, and I am going to watch the movement of the market, and I will just watch without doing anything, like maybe 21 hours, maybe 8 hours a day, maybe 21 days a day, 21 days a month. Okay, you just gonna watch, and you do nothing. You just watch and get used to the price action, because you're gonna start thinking. You're gonna start seeing things in 3D space. instead of this 2T space. Okay. I hope that makes sense. So any questions?
Yes, Haji, that was perfect. And also what you just mentioned, like I tell everybody, you, Jack Pie, of course, I don't need to say everybody, is keep like a A4 diary, 1 page a day.
Yes, diary. I couldn't, find that word. So
Pick 1 page a day, every day write it down, and every position you take, write it down, and put your targets, everything. And then as soon as the trade is done, don't go and do a post-mortem on it. Leave it a few days. After that, look back every weekend or whatever and make notes. And before you start your week, like say today is Sunday, look at the charts and everything, even print them out, make a rough roadmap, what you see. And then tailor that, think of it like a cloth. And like a tailor, as the market moves, cut it and tailor it to fit. Okay?
Even for example, you guys, I will tell you something. Even Zarif Haji takes note into the paper still.
Yeah.
How many years, Haji, have you been trading?
35 years. Well, 34. Yeah, 35 starting. Yeah.
34 years, and still he's taking notes every day. When I speak with him, because every week, every day we speak each other, and he just turns the pages and says, okay, market made this high, this low yesterday. You need to keep note, because as you write, your brain get used to it. You just learn better.
Yes, I mean 34 years. At 34 years, A4 diaries I've got every year, Haji. Every year.
Oh, wow. Every year.
I showed it to Prabha last time I was cleaning my room. I said, have a look at these files, This is and many times, because I'm crazy, and I think last maybe week, a few days back or whatever, I was in hospital, and I said, okay, I'm guessing the market is here, Euro, pound, gold, German, Wall Street, yeah? And
yes.
To be honest with you, there is no magic to it. It is just by doing this writing every day. And after a while, I don't know what has happened, don't tell me how, but I just kind of see the number or a charts in my head and I put it down, and you guys say is either right or wrong, am I out or am I near there? Yeah. And most times, alhamdulillah, I am nearly spot on. I don't know how. Don't ask me how.
And there is an indicator here, Zigos indicator. When Zarif goes, market moves.
Yeah, Vulture Ustad, he calls it the Zgos system. Zarif goes out system, and the market moves like crazy.
Exactly.
The biggest moves, but I give it to you all, guys.
Yeah. Oh, Jack Bai is here. Jack Bai, thank you very much. Yeah, thank you very much. So, any other questions?
Any questions, everybody? Yes. Soon, what we'll do is we'll arrange a live session with everybody.
Okay.
And we will trade the market live. And also, Tom is going to give me a date next week, hopefully, or within a few days. He said he's going to get back to me as fast as possible. And he's going to try and finish off his session into either 2 or 3 parts. And then what I was thinking, Haji, is we do a live session ourselves. And then after that, I am going to bring Larry in to do a live session.
Perfect. Really, Tom and Larry is going to be cool, great.
And then I'm going
Haji, you know what? Everyone can talk about market when looking at the past prices.
Yes, hindsight.
Well, everybody is going to see what we do in the live session. Yes. This is the best thing. Yeah.
I took an opportunity and I said to here that from the people who have come, and I mentioned it before as well, and I told them those who are willing to work hard with an open mind, we will give it. I gave them my email, and I said to write a few words as to what they've been doing, their progress, or they started or not. And I said, we will take in 3 or 4 or maximum say 5 as a student and put them in our inner sanctum. Yeah. but they are willing to work hard with the open mind. So we're giving them that chance to become like life students. So, and as Sheena Matchas knows, in there, everything is live trading and everything updated. They will see in live action everything what we are doing.
Yes, they can see live action.
We don't want any riffraff. We want somebody who is honest, trustworthy. Like recently, we found out one with us for nearly 3 years, and we had to ban. Yeah.
Yeah.
We want to honest people. We don't care how rich you are or how poor you are. Money doesn't matter to us. Okay. We just want you to put the hard work. Us. That's all.
That's great. So, if there are no more questions, I need to end this here, and I have to end as well. So, thank you very much for joining us today. And this webinar is being recorded, and we are going to Zarif Bhai is going to send you the link, the YouTube link. And it's going to be live, and you can watch it over and over again. Please do it, because it's going to be today is the first day of your rest of your life. So just do it. You have to do it. You have to you have to start. Okay. So watch it over and over again. Nothing is late, and I hope you enjoyed. And there is no right or wrong, just price. This is just price, and we need to follow the price. That's all we do.
Okay, one more thing. We will give you of course, Haji has made a YouTube channel for us as well, and we posted quite a few Larry and Tom and things like that in there. But one suggestion to all of you, and a matter of trust as well, is that all this stuff we are doing is for you, to make you the best you can be. So we don't want you to post away the YouTube links everywhere. This is for you, for your work, for your personal guidance. Okay?
Yeah, sure. Okay, thank you very much for everyone joining this webinar, and I really appreciate that. I really enjoyed being here always, all the time for Zarif Bhai here. And yes, let's do it more often.
Yes,
we do it live, Haji. The best. We do it the best. Okay.
Because look, like you've seen me, I'm up nearly 19 hours every day. Yeah.
Yes, I know. You never sleep.
And we are trading live, so it's no big deal. We can just put a live screen share, and everyone's fine, And we are not inviting them to trade. They can see how we do things, how we progress. Not, market did that, I did this. No, I'm doing this now. This in real time.
How we manage a trade, bad trade and good trade. How we manage it.
How you can ladder a trade. People say don't add to a losing position. No, it is not a loss until you take.
No. This is BS. BS.
You read the textbooks, and most of them, 99% is written by these authors and whatever have you. Put a 20-point stop. 20 points for you're conditioning your brain. The market, for example, we can say most people don't know S&P, and we say S&P has moved 60 points, volatility or whatever. The Dow has moved about 500 points. If you put a 20-point stop in Dow before you blink, you are dead.
Well, what you are saying is basically the market guy. What you are saying, all those croaks, here is my money, come and take it. Yes. This is what you are doing.
Because they condition you to put 20-point stop. It is in your brain, 20, 20, 20, or 3-1. Okay. All this risk and reward, 3-1 and everything, all bullshit as well, yeah?
Of course, Haji, because, you need to just manage your money. That's it, the position size.
Say you take a trade, and, as soon as it comes in a bit of profit, and you lock in a few things, you straight away compacted your risk anyway. Huh? So main thing is, see what you want and what the market wants to give you, yeah?
Yeah.
Yeah, that is
Yeah,
the
so
only
it's not important what you want.
what we want and what the market is easily giving you. Say for example, you put a target of 50 pips or 50 points. The market is giving you 20-25 points that day. Take it. And then
Exactly.
and by doing it multiple times, instead of your 50, you might do even 75 or even 105. Yeah.
Yeah. That's all. That's all.
Most people avoid ranges. You can trade in the range like anything as well, as long as those people who trade forex look at your spread and it's giving you a decent amount. Yes, you can do this, Ricardo. As soon as I get a little bit on the mend, a little bit, I'm fine, I'm perfect. But we will tell you in advance which day we will do what you call a live session. Yeah. And not only one live session, we will make it into a habit.
Yeah, that's better.
We'll make it into a habit. Yeah. So say like Friday is usually, we call it crooks day, so we can see what is happening. But say if there is like non-farm payrolls, or when the Fed is going to come out with the FOMC on a Wednesday, we can trade the Fed. We can trade the normal market. So we can do like that. We can do like when Monday, I call it winner, WNER. And that is usually for S&P 500. And what happens on that on a Monday is WNER basically is my acronym, stands on World Not Ended Rally at the weekend. Yeah. And we try and see if we can trade a rally on a Monday.
We can see that. We can do that.
We can do all that, and gold and things, we can scalp it like anything, no problem at all.
HRB. Run, break.
Hit, run, and break. And obviously scalping, we call it FIDO. Yeah, follow the dog.
Yeah, follow the dog.
And also every day, Haji, like I do about maybe 60 odd daily levels. Yeah.
Yes.
And I've shown everyone daily levels so many times, but many still don't get it. But if they are there, they can use the daily levels as how we use them.
Yes,
exactly. To MOB, in between the MOB. It's trading is not difficult, we make it difficult,
Yeah, exactly.
And you must, one thing I tell everyone, Haji, is a trade can be a profit or a loss, doesn't matter. It is the journey, whether it's direct or scenic, route. That's it. And also how you manage a trade, how you ladder it. Yeah, that is the main thing. Buy and sell button is the easiest part.
Yes.
That's the easiest part,
Exactly, Haji. Exactly. So today, again, thank you very much for joining us.
Thank you, Haji. And I'll tell you one thing, everybody, as well. Me, I always like jack by everybody. I grab on the spot, and you are doing a webinar. That's it, yeah? Like in between as well. Jack by, Nishant by, Osman, do something, right? And we try and give you as much as we can. Like Haji, I only grabbed him on, when was it? Friday or Saturday. Haji, are you free? Do you think you can do it? And within the day, Haji said, yes, I'm okay for Sunday. Fine, done. Here you are, guys.
It was just for
I have to prepare for 1 week or anything. No, it's on the spot. You can say it like sink or swim, yeah? Sink or swim. That's it.
Yes, exactly. So thank you very much again. And one more time. So see you next time then.
Yeah, so everybody is going to send a feedback, and I'm going to send it to Haji. And also,
thank you very much, everyone. Thank you so much for your time on Sunday here. And stay healthy, stay safe, trade safe. Bye-bye.